Thinking of buying a home in Toronto or GTA in 2025? Before you do anything, watch this. The market is shifting fast, interest rates are falling, policies are changing, and buyers are more uncertain than ever. Whether you're buying your first home or making your next move, this three-part video will give you the insights you can't afford to miss. Let's dive in. The Great Toronto Area housing market is on a shaky ground, with the US trade war adding fuel to an already struggling market. Buyers are hesitating, home sales are plummeting, and affordability remain a major concern. The question is, how much worse will it get before things stabilize? Even if building supplies remain in Canada and they're not subject to the 25% US tariffs, the Greater Toronto Area housing market could still face serious challenges. Economic uncertainty from the ongoing trade war is expected to result in fewer homes being built and rising prices, according to the GTA Building Industry and Land Development Association. Dave Wilkes, CEO of the Building Industry and Land Development Association, emphasized the impact of economic instability. To address this, Wilkes and other experts suggest removing GST on new homes, expediting approval processes, and eliminating development charges. However, these are not new proposals. Home Builder Association have been advocating for such measures for years. While past challenges cannot be undone, Wilkes stressed the importance of looking forward. Toronto Mayor Olivia Chow has already begun implementing some of these changes and highlighted the city's role as a major developer. Toronto is planning to construct 65,000 new rent-control homes by 2030, but Chow acknowledged that municipal efforts alone are not enough. Additional support from the provincial and federal governments is needed to mitigate the impact of tariffs and bolster the housing market. Despite government reassurances, market data paints a concerning picture. The number of GTA homes listed for sale increased by over 5% last month, yet home sales dropped by more than 27% compared to the previous year. Although the average selling price declined slightly, the typical GTA home still cost over $1 million. Given that 2024 was an already weak year for real estate, the slow start to 2025 suggests a worsening market trend. From my own experience in the market, I'm seeing firsthand how uncertainty is affecting buyers. Many are hesitating, unsure of whether now is the right time to purchase. Some are holding off, hoping that interest rate will continue to drop, while others are cautious of how tariffs and economic instability might influence home prices. This uncertainty is keeping potential buyers on the sidelines, waiting for more clarity before making a move. The GTA housing market is at crossroads, and the road ahead is far from clear. With economic instability, hesitant buyers, and government interventions that may or may not work, the market remains unpredictable. The big question now is, will 2025 bring relief or more turbulence? Only time will tell, but one thing is certain: staying informed and prepared is more critical than ever. So we know the market is uncertain and a lot of buyers are hesitating right now. But here is the next big question: what is the smartest way to buy in this environment? Let's break down the top trends shaping Toronto real estate in 2025 and the mortgage strategy that could save or cost you thousands. Variable or fixed mortgage rates. If navigating Toronto's real estate market was not difficult enough, the recent welcome moves by the Bank of Canada to reduce interest rates, with the state intention of continue reducing rates in the coming months, has added a whole new level of complexity to the lives of anyone planning to buy or sell a home in the GTA in the near future. For buyers, you not only have to consider what and when to buy, you also have to decide whether to finance your purchase with the fixed or variable mortgage rate. Buyers are always facing this question of course, when negotiating a mortgage, but the question is far more challenging in an environment of highly probable declining rates. This decision is not just about interest rate numbers. It's about peace of mind, financial stability, and planning for the future. At the time when rates are expected to continue to fall, picking the right mortgage strategy can be as important as finding the right property. Currently, lenders are encouraging clients to go for fixed-rate mortgages, and it's easy to see the appeal. Fixed rate provides stability, locking in your monthly payment for the long term and protecting you from potential interest rate hikes further down the road. For many buyers in Toronto, this predictability is invaluable, especially given the city's high prices and competitive market. By locking in the rate, you avoid future surprises, which is a relief for anyone looking to budget consistently in an expensive market like Toronto. Yet for those willing to ride the wave of change, variable rate mortgages offer a compelling alternative. Variable rates are tied to the Bank of Canada rate changes and could save you money in the long run if rates do indeed decline. With the expected cut in the coming months, some experts are suggesting that you start with variable rate now and switch to a fixed rate when interest rate drop further. This approach, while riskier, can allow you to take advantage of falling rates to save money in the longer term, maybe as early as 6 months to a year from now. If you're comfortable with some initial fluctuation in your monthly payment and have a buffer for potential rate changes, a variable rate may offer more flexibility and financial gain as the economy moves from a period of higher interest rates to lower ones. Many people, however, prefer the certainty of fixed rate right away, as these offer immediate savings and a sense of security. And it's worth acknowledging that variable rates have developed a bit of the reputation recently. A couple of years ago, rapid rate hikes left variable rate homeowners feeling financially squeezed. However, with inflation cooling and rate cuts anticipated, today's environment offers quite a different outlook for those considering a variable rate mortgage. As a buyer, you may also be asking yourself if now is the right time to enter the market, or would it be better to wait for rates to fall further? The answer depends on your financial readiness, risk tolerance, and priorities. Toronto's high demand, low supply housing market has historically pushed prices up, often offsetting any savings that lower rates may bring. Even if rates drop significantly over the next year, Toronto's property prices may start to rise more sharply, making the overall cost of home ownership just as challenging. Indeed, it is the very reality of the new lower interest and mortgage rates that will drive prices upwards. If you're financially prepared and have a solid down payment, buying now might make sense. Locking in a property before further price increases could give you a head start in a market where property can appreciate quickly. Starting with a variable rate mortgage could be a smart approach for some, as it's allowed you to benefit from the anticipated rate drops while buying now or soon while prices are relatively low. However, if you're still saving your down payment or feel uncertain about current rates, waiting could be also beneficial, particularly if you're open to neighborhoods outside Toronto core or can consider more affordable options in other ways. By waiting, you may have the chance to secure a lower rate in the future without stretching your budget on current rates. Ultimately, deciding whether to buy now or wait is about balancing financial preparation with your goals. For many, it's not just about securing a roof over their head, but making an investment that aligns with their future. In Toronto's fast-paced market, the right time to buy is when you feel ready and able to take on commitment, whether with the calm of the fixed rate or the flexibility of the variable one. As a realtor, it's not my place to recommend to you how you should attempt to finance your new home. That is a very personal decision, and only you and your family are in position to answer concretely in consultation with mortgage specialists. But I hope that my discussion here of the new dynamics in the Canadian real estate market brought on by the shift in Bank of Canada policy from a period of anti-inflammatory higher interest rates to more growth growth-oriented lower interest rates will be helpful to you in thinking about the new horizon in which all of us in the Canadian real estate market find ourselves in. But with a bit of luck, it may be possible to take advantage of declining rates in a period of as yet stable prices to find just the property you want at the price and mortgage rate that will meet your needs. Many market analysts believe it will be another 7 to 12 months before the GTA market will see serious growth in sales, so this near-term period of relative calm may be a very good environment in which to act, especially for buyers. From an interest and mortgage rate point of view, maybe early 2025 will be especially attractive, but time alone will tell. Alright, so now you understand what's happening with rates and whether buying now makes sense. But strategy alone is not enough. You also need to avoid the biggest mistakes buyers are making right now. Let's take a closer look at what to watch out for and what recent government policies really mean for you. Many buyers fall for common myths that slow them down, cost them money, or even stop them from getting their dream home. Think you know the Canadian housing market? Let's uncover the truth behind these myths so you can make smart, confident decisions and secure the home you deserve. Myth number 1. You need a 20% down payment to buy a home. Many people believe they must save at least 20% of the home's price before they can buy. This is not true. In Canada, the minimum down payment depends on the price of the home. If the home costs $500,000 or less, you only need 5% down payment. If the home costs between $500,000 and $999,000, you need 5% on the first $500,000 and 10% on the rest. If the home is $1 million or more, you need at least 20% down. If your down payment is less than 20%, you will need mortgage default insurance, also called CMHC insurance. Some people see this as a bad thing, but it actually allows buyers to enter the market sooner instead of waiting years to save a larger down payment. What does this mean for you? If you have a stable income and can afford monthly mortgage payment, you don't have to wait until you save 20%. The sooner you buy, the sooner you start building equity instead of paying rent. Myth number 2. You should find a home before getting pre-approved. Many buyers start searching for home first and they think they will figure out financing later. This is a huge mistake. Here is why pre-approval is the first step in a home buying process. It tells you exactly how much you can afford so you don't waste time looking at home outside your budget. It makes your offer stronger because sellers prefer buyers who are pre-approved. It prevents surprises like realizing too late that you cannot qualify for the home you want. What does pre-approval involve? A mortgage broker or lender looks at your income, credit score, debt, and down payment to determine how much they will lend you. Once you're pre-approved, you can house hunt with confidence and move quickly when you find the right home. Myth number 3. The best deal is the home with the lowest price. It's easy to think that the lower price means a better deal, but price is not the only factor that matters. A home with a lower price might have major repairs that cost tens of thousands of dollars, or poor location which affects future resale value, or maybe higher carrying costs like property taxes, heating, or insurance. On the other hand, a home with a higher price but lower mortgage rate would actually save you money in the long run. For example, a $600,000 home with a 5% mortgage rate costs more per month than a $650,000 home with a 4% mortgage rate. A well-maintained home in a great neighborhood will likely appreciate in value faster than a cheap home in a declining area. The bottom line is, the best home is not always the cheapest home. It's the home that gives you the best value now and in the future. Myth number 4. You should wait for the market to crash. Many buyers hesitate because they're waiting for home prices to drop significantly. While prices do go up and down, waiting for a crash is risky. Here is why. Canada's real estate market is resilient. Prices may dip temporarily, but over long term they continue to rise. Even during downturns, demand remains strong in many areas. Desirable locations hold their value. Interest rate change. If you wait for lower price but rates go up, your monthly payment could actually be higher. For example, let's say you wait a year hoping for prices to drop by $50,000 $50,000. But during that time, mortgage rate rise by 1%. That extra 1% in interest could cost you more over time than the $50,000 you save on the purchase price. Rather than waiting for the perfect moment, focus on buying when you can afford it and when it makes sense for your personal and financial situation. Myth number 5. Skipping a home inspection saves money. In a competitive market, some buyers skip home inspections to make their offers more attractive. This is a dangerous mistake. A home inspection helps identify hidden problems such as foundation cracks that could lead to expensive structural repairs, or old electrical wiring that might be unsafe or need updating. Maybe leaky roofs or plumbing issues that could cost thousands. Skipping the home inspection might save you a few $100s upfront, but if major issues arise later, you could end up paying tens of thousands in unexpected repairs. If you're in a competitive market and worry about losing a bid, you can consider a pre-inspection before making an offer, or a short inspection period instead of waiving it completely, or maybe negotiating repairs or price adjustments based on the inspection report. The bottom line is, a small investment in a home inspection can protect you from huge financial headache down the road. Myth number 6. All real estate agents are the same. Some buyers think any agent will do the job, but a good real estate agent makes a huge difference. A great agent will negotiate on your behalf to get the best price and conditions, will help you understand the market and avoid overpaying, will guide you through paperwork, inspections, and legal requirements. A bad agent, on the other hand, may be inexperienced and miss critical details, or pressure you into a deal that is not right for you, or maybe lack knowledge of the local real estate market. How to choose the right agent? Look for an agent with experience in your area. Ask for referrals and read reviews. Make sure they understand your needs and communicate well. A skilled, knowledgeable agent can save you money, time, and stress. Buying a home is one of the biggest decisions you will ever make. Don't let myths or misinformation hold you back. With the right knowledge and the right team, you will navigate the Toronto and GTA market with confidence. To help you get started, here are some key truths every home buyer should know. You don't need a 20% down payment to buy a home. There are flexible options that can work for you. Get pre-approved before you start house hunting, so you know exactly what you can afford. The lowest price is not always the best deal. Look at the bigger picture, including condition and long-term value. Waiting for the market crash could cost you more in the long run, both in missed opportunities and rising costs. Never skip a home inspection. It's a small step that can save you from major issues down the road. The right real estate agent can make all the difference, guiding you through the process with expertise and support. If you haven't made it this far, you're already ahead of most buyers, because in today's market, success is not just about finding the right home, it's about having the right strategy. Whether you're ready to buy now or just starting to explore your options, I'm here to help. Feel free to reach out anytime or book a call using the link below. And if you found this helpful, like, subscribe, and drop your questions in the comments. I'd love to hear from you. Until next time, happy house hunting! If you found this video helpful, please like and share it, and subscribe for more helpful content on navigating your real estate journey in Toronto. If you have any question or need any advice on this topic, feel free to reach out.